A big story. It was a panic Monday on Dalal Street after the Mauritius tax scare sent shivers through the stock market.
Stocks tanked across the board on rumours that India is looking to renegotiate its double taxation avoidance agreement with this tax haven.
In fact, the Sensex plummeted more than 600 points intraday, but managed to recover a bit after the government clarified that there was no provision to review the treaty immediately.
But that was not enough to wipe out the losses completely, and by the close of trading, the Sensex was down 2%. The Monday mayhem on Dalal Street is our big story tonight.
Panic Monday on Dalal Street, and it was a sea of red within an hour after the markets opened for trade. There were no signs of the carnage at the opening bell, with the Sensex starting the day at 17,925 points, marginally above Friday's close. But it started showing signs of weakness soon after and fell 152 points in the first half an hour of trade before showing some signs of recovery. But the recovery was short-lived. A rumour that the government is looking to renegotiate its tax treaty with Mauritius spelled doom. At 10:13 a.m., the Sensex plunged 610 points from the open to 17,314 points. Within seconds, it recovered a bit. Domestic institutions came to the rescue barely a few minutes after, and markets started recovering slowly. The Sensex inched up to 17,665 points at the peak of its recovery before it started to decline again, to close at 17,507 points. While experts attribute the short-lived respite to a little more clarity on the tax treaty front, the outlook on the broader market remains pessimistic.
It was a knee-jerk reaction. Having said that, basically there was weakness in the market. Market would have anyway fallen. If not for this, market would have continued the downward drift that we have seen in the last few days.
The top losers include Reliance Communications, that was down 7.8%, Reliance Infra, that fell 6%, Tata Motors, that lost 5.1%, and Reliance Industries, that saw its sharpest fall in 20 months and was down more than 4%. But was the panic for real, or was it a part of a game plan by a handful of trigger-happy foreign investors?
I definitely don't think that there was a game plan on part of FIIs to bring down the market the way it came down today. Indian market is still dominated by the FIIs, and if the Mauritius treaty is somehow changed, there will be a significant impact, at least in the short term.
The government says it has not even begun talks with Mauritius on the tax treaty. Whether the treaty goes or not, in a market that lacks positive triggers, not many are betting on a bounce back. Mrinalini Krishna, ET Now, Mumbai.